The International Monetary Fund issuing a stark warning over the coronavirus, saying it's going to cause the worst downturn since the Great Depression. Joining us to discuss, Doug Flynn, certified financial planner and co-founder of Flynn, Zito Capital Management, and John Browne, former advisor to President Trump and Margaret Thatcher. Good to see both of you today. Let's get the immediate response to that statement from the IMF. Doug, we'll start with you. Again, this could be the worst recession since the Great Depression. That's some pretty shocking language there.
Yeah, and the markets seem to have bounced off the pricing in of a really big recession, and we came all the way up to where we actually weren't even pricing it in anymore. So it's kind of reasonable that we're seeing the downturn we're seeing again, because we're getting some retail numbers and we're starting to get some more of the hard numbers. That bounce off the bottom was twice as good as you normally expect in a bear market, so it doesn't surprise me. But, you know, look, we are definitely anticipating some of the worst and ugly numbers that we've seen, and we have to get through them to get to the other side. And in as much as they've gone down as much, you also have to expect that when we do get through it, we're going to have a pretty good snapback. That's what we're hoping for. But we got to hang in there.
We are. We're all hoping for that big snapback sooner rather than later. John, here again, let's talk about this. You know, we could be seeing things worse than the Great Depression. I mean, come on, we had to get past the Great Recession of 2008 here, and now we're facing the economic implications from the coronavirus again. That's a lot to live through in just one lifetime.
Yes, I mean, Goldman Sachs forecast a loss of fall in GDP of 40%. In the worst of the Great Crash, it was 30%. So this is going to be in some ways worse, but I think the engine is still alive, although not switched on, whereas in the Great Depression, the whole thing had died. World economy had almost died down through the wrong federal bank activity. But this time, liquidity has been pumped into the system like nobody's business, and basically the economy is alive, just dormant. And I agree with the last speaker. I think when the recovery comes, it'll be pretty substantial. I think you're going to see high volatility as the market trends sideways from now until about the second half of the year, when I think you'll see a general market trend upwards.
Well, we know, President Trump has said the same thing. He says it's going to come back with a bang. So I know we're all waiting, of course, for the country to reopen. In the meantime,
I don't know about the bang, but I think it will be underlying. It will be trending upwards.
Okay. Guys, you know, this morning we saw Wall Street. It was off to a rough start after, of course, retail sales plunging a record 8.7% in March. Right. Doug, does the activity we're seeing support, of course, this idea that you know, we're still kind of in a tough time right now, and we're going to continue to see those numbers just grow at this point?
I think so. And, you know, this is what we do, right? We look at the headline number. We saw the worst numbers on record for retail sales for the month. But when you peel it back, you realize that they've only been tracking that since 1992. And with all due respect to numbers, I mean, I have T-shirts that are older than that. So I like data that goes a little bit farther back than that. But nonetheless, it is the worst number on record. That's the headline grabbing thing you look at. And you say, OK, it's the worst since 1992, that data point. But that drives market sentiment. And that's what you're seeing. But I fully expect some really ugly numbers to come through here, as we've said. And you could have really horrible negative GDP numbers, the likes of which we've never seen before. And that will go back decades. So that's a little bit more of a real number. But nonetheless, right now, people are just looking for reactionary type of things to focus in on, especially after the quick snapback you've had in the markets. I mean, we're up 30-something% off of the lows. You're going to have a retrenchment of that at some point.
Wow, I know. And these numbers. Go ahead.
I think one of the keys to the recovery is going to be small business. 46% of American employment and 48% of the GDP. And so their small businesses, they only have an average of 2 weeks cash available, whereas large companies like Apple have $2 billion of cash available and access to the capital markets. And this shows the depravity of Pelosi and the Democrats of delaying this whole package by a week while they tried to bribe Congress to spurge out money on things that were not of essential use in this emergency. Quite disgraceful. And I think a lot of small businesses are going to suffer for it. And if they do suffer and go bankrupt, all of America will suffer.
We do know that those small businesses are suffering at this time. Good to hear from you both. That's Doug Flynn and John Browne. Thanks for speaking with us today.